in trading. And you can see what the disclaimer is on the screen. I would simply put it this way: you are responsible for all risk that you incur in the market. And there's a lot of risk to be incurred. We want to make sure we manage that as best as we can. But ultimately, you and you alone are responsible for every decision that you make in the market. Now, past performance is not indicative of future results, so make sure you do your research and understand that every trade involves risk. I think that about sums it up. So, the in my opinion section, Tom is not with us here this morning. But in my opinion, one of the things we're looking at from the markets, we want to see if we can get above the three opens: the open of the month, the open of the week, the open of the day. Market's actually in a pretty good spot as far as the S&P is concerned for all of those, but we also want to see if the market's going to be able to extend the trend. That means making a high higher than the previous day. In the S&P futures, yesterday's high was 69.69, and we have not quite made it up there. So that's going to be the thing that we're all kind of focusing on in terms of the market. It's been a great morning. Market's been climbing. I think most of you are aware of silver. Got to make sure to mention that. Silver going over 100, 100.47 the high. Get a look at that in just a few minutes. Before we go, though, I want to talk about some of the news that's been sort of shaping this market. This week, especially Greenland, the art of the deal, if you will. Uh, whether first of all, this story started long before this weekend, but this weekend things really kicked off. I think we're all familiar with that. Kind of I don't want to get too political on this one, but one of the things we do know is that what was requested was met with a little bit of consternation. The market went down. There seems to be a bit of a coming together of minds, not completely, but we're getting there. So a lot of that negative pressure from the weekend has been removed from the market, and we're getting to a point where we're back to where we were before this whole thing began. As Tom would tell you, there tends to be three steps. There's the bully, there's the cuddle up phase, and then there's the results. So I think we've gone through two of the three steps, waiting to see what the third looks like. But the Greenland issue certainly has impacted the market in a big way. Um, Really kind of explains everything that we've seen over the past week, from this time last Friday to till today. That's one of those big overarching factors. Now, when we get to the economic information, GDP and PCE, uh, kind of a big deal. Now, what I want to do though is I want to show you something real quick. I want to go and move away from the slides for just a second and take you over to Econo Day. Actually, wait, I don't need that one. I need this one. Okay, so let's move this page out here. This is us.econoday.com, actually a great source of news for the market. And kind of want to take you into some of the things that we were looking at yesterday. It was kind of a strange way that the market reacted. Now, at Econo Day, when they talk about personal income and outlays, that's the PCE, right? That's what that one is, personal consumption expenditures. So when we go through and look at this, first one listed here is for the October data. And when you go and look at that first information we got on PCE told us that inflation had dropped down. Go down over here to core PCE price index year over year from 3.0 to 2.8%. Oh my gosh, that was a big thing, very positive for the market because with the government shutdown and everything, people were thinking inflation might be a bit of an issue. But then you come back in and there's another personal income and outlay. Let's go ahead and look at that one. And this one's for the November data. And we see that core PCE jumped right back up to 3%. Same with the PCE price index. So it's sort of like good news, oh no, wait, bad news, actually, no news, basically no change on the PCE. So that was, I think, a little bit confusing to many people, those two PCE reports, and then come to realize we don't even have the December data yet. So we're still trailing a little bit. This is the government catching up. That's what happened there. Now, with the GDP report, this is actually still Q3. We didn't actually get our Q4 data. So coming in as expected, well, that's what you should expect. That's Q3 data. That's not Q4 data. So those reports coming out a little bit earlier than what you typically expect them to be, well, that's because they were catching up. And even today, we get delayed data from leading indicators coming out twice. You can see October data here at 0.1%, and then leading indicators today, November data down 0.3%. But again, we're not looking at the December data. We're not looking at the current data. PMI composite flash, though, which also came out this morning, this is current data, January 2026, and the composite index 52.8 versus 52.7 prior final read. So, as expected, no real waves there. But one of the big issues we've got when we talk about the news and the market is we're still delayed on it. So we're still waiting for more information. And then you go to earnings reports, and the forward guidance has got to be a little bit guarded because there's still all this information coming out. So I sort of jumped into the PMI composite flash and wait, did we have consumer sentiment? I didn't see consumer sentiment. Hang on one second. What are we looking at? Let's go back in. Oh, there it is. Consumer sentiment. Skipped right past it. That's good information. That is for January. Things do look positive. The year ahead inflation expectations down from 4.2 to 4.0. So we got good news there, and it's current news. So that's one of the big things is getting all that information current. And that's what we're in the process of doing because we know that the market itself, as far as the information, we still got a little bit of a delay built in. So we'll see if that catches up. Be kind of a big event if it does. And before we get to the actual slides, I'm going to let Jonathan take over and handle things in just a minute. But I did want to pop over and take a look at what we've got going on with these broader markets. The S&P futures, which I think are the best way to track the broader market. You can see they're up here at 69, 63, 75, getting a little bit of a boost as we move into the buy zone. NASDAQ's already been there. It's climbing. Dow and Russell, they're a little bit trailing. But go over and look at a swing of the S&P, and you can see that big drop off, due in large part to the news around Greenland. Market kind of settled and then has begun the recovery. But what I want to look at, I want to look at that closing price. Let me just blow this chart up to the S&P. I want to look at that closing price last Friday, 69.77.75. And I think the market still has a little bit of work to do. Number one, getting above yesterday's high. Number two, getting back to where we were on Friday. So a little bit of the bullishness that you've got in terms of my expectation of the market, maybe even Tom's, would be that there's still work to be done. We know what the targets are. And that's one of the beautiful things about the market pulling back is you can look at where this market should be trying to go and then ask the question, is it clear to go there? So I always like when the markets pull back because it starts clarifying information. Why is the market bullish today? Because it's trying to get back to where it was last Friday. It's trying to make that run up to yesterday's high. It's trying to show off. Will it succeed? Well, that's the great question that every trader has. But where is it trying to get to? Well, we got a pretty good idea of that, primarily because you did have that pullback. So, kind of an interesting way to look at the market, just letting the market show you what it's capable of and then deciding whether it can actually do that. So that's kind of a fun time. All right, let's get back on the slides here. Reminder, all trades in Train and Trade are tracked through T-Buzz Talk and Trade and January FTD stocks. And I am going to let Jonathan take over at this point, take you through those FTD stocks, and then we'll talk a little bit more about some market issues as we move through. Jonathan, are you around?
Yes, I am, Chuck, and thanks. Let me take the screen back from you.
All right.
We'll get this FTD sheet updated again. Let's see, I updated it at 9:54 this morning. Tend to update it during the first half hour. We'll get it updated again because things have moved a little bit.
Oh, because why not?
Because why not? Yeah.
Yeah, exactly. Might as well have the most recent information.
S&P's moved up about, actually close to 30 points since last updated this. It's at 69.59. We are above the open of January, and it's got to get above 69.91 to get above the 3-day high. So the NASDAQ 25,815, open January at 25,478. It's up on the month. The Dow 49,332, open January at 48,373. It's up on the month. Crude oil is still long above 58.87. Gold is long above 45.08. Very strong. Look at silver. Silver hitting $100 an ounce. That's pretty awesome. Yeah. Bonds and Bitcoin are neutral right now. Hang on a second. Did an alert go off? Let me check on that. We have some open trades on.
All right, while Jonathan's checking on that, saw a question in there. Why does the roadmap show a target that is higher than mine? Well, how much higher? Because if it's off by a point, I wouldn't worry about that too much. That's going to be the ATR, what the open of the reference bar looks like. So, for instance, I showed the open of reference bar 3 at 69.34 quarter. If you show it at 69.34 even or 69.34.50, one tick off at that particular time, it's going to change the equation a little bit. So, if it's a little bit off, don't worry about it too much. Yours is around 78. Yeah, it's going to be a little bit different.
Okay, Mac, we'll do this. Click on Setup and go to Computer. Setup Computer. And from here at the top right, you're going to want to make sure both of these boxes are unchecked to be sure that you've got your time settings, because that can make a world of difference there for those zones. That'll make sure your reference bars are in the right place. All right.
Yeah, it sounds, Mac, like you might be running the RB3 open at 69.47.
Restart your roadmap and shoot me an email with a picture.
Yeah.
Row at DTI Trader.
So if it's that big of a difference, there's probably a time issue.
Yeah, that's my guess too. But we'll move on and I'll get to you, Mac, this afternoon. Let's see what else we got on the spreadsheet. We got a block of long here, XBI, AGQ, bunch of gold and silver. Been that way all month. There's Apple still short. AMD made another new high today. It's been long. Micron, STX, WDC, those all look good. Where's Walmart long? GM taking a little breather. Nike's Tom's been real focused on Nike. So as the months go on here, you're gonna want to pay attention to the Nike stock and it's kind of been in the doldrums. It's sometimes Tom mentions stocks that you're like, what's he seeing that one? Well, let's take away our bias, right? We can use Tom's bias, of course, but take away our bias and just focus on the numbers. And let's see if the stock can actually get above its 3-day high in the months coming. It's a little too late in the month this week or this month, but we'll see what February brings for the old Nike. NNEs long. And so that's the tickers. These tickers will change throughout the month, although most of them will probably stay. A few might drop off throughout the year, or a few might be added throughout the year. Get these slides posted again in case anybody just got here and needs the slides. Thanks, Chuck. So let's look at what silver's done, because obviously silver made another high this morning, right? The spreadsheet, by the way, that spreadsheet's on slide number 7. Just click, grab the slides from the chat there. And once you're on the slides, click on the click here button on slide number 7 for the spreadsheet. You can save that spreadsheet, just bookmark it to your, favorite web browser, because it's going to be what I'll do is I usually at the end of the month, I'll click file and make a copy of the January spreadsheet and just change the active link onto February. So if you have the spreadsheet, you don't have to, look for it continuously every day. Just bookmark it with that little star at the top right of your browser, and you'll have it for the rest of the year. All right, so back on December 10th, Tom's been saying, how long has been Tom been saying buy silver? Back on December 10th, it opened above the December FTD algo. It really hasn't looked back since then. We could probably go back further. Tom just wanted me to look at what the futures have done since December. All right, he specifically said December. So since December 10th, when it opened above the FTD algo, this thing's been up 63% since then. I said about to hit 100 on the slide because at the time this morning when I was putting that slide together, it hadn't hit 100 yet. Well, look at it now. It's at 100.60. So silver over 100. Pretty awesome. And the question is, how many times has Tom said to buy silver? What's your estimation? In the chat, how many times has Tom said to buy silver? Or how many times has Tom said he's buying silver? Over and over again over the past months or even a year. Bob says 60. Yeah, that's probably about right. So, but wanted to make this point. You'll hear, if you're tuned in to Tom, if you've been here for many years, this as a fact. If you're brand new, just want to get the point across. First of all, you're not going to catch every trade, right? So don't beat yourself up about missing anything. But when Tom latches onto a trade for weeks and months, like he has silver, right? There's a reason for that. So need to pay attention. All right, need to pay attention. Tom's very good about seeing big picture moves, just like he is about short-term trade in the market. So just that key point. View every trade, as Tom says, view every trade as your next 10,000. Each trade is, relatively speaking, if it's a loser or if you miss one, a winner, ask yourself, is there still time to get on board? Don't beat yourself up about it. But when Tom latches on to something, pay attention. Now, did everybody enjoy the marathon yesterday? We have a good time doing them. It's a lot of work in the moment, but we look back and say, hey, that was good stuff. There was a recording there from yesterday. Just click the click here button on that slide number 12, and you can maybe over the weekend review what we went through over yesterday. It's quite a lengthy session since it was basically all day, but should be some good nuggets in there about the current market and current strategies Tom's using that are working. So speaking of the marathon, we did 4 trades yesterday. Let's check in on those. XBI, the stock was a little down from the highs yesterday. We did the Feb 27th, 132, 137 debit call spread. We paid about 210. Our target's 254. Let's check in to see where exactly. It was a little bit down this morning when I looked at it, but right now it's at $1.75. So it's got hit a little bit for sure. Got hit a little bit for sure. But all bets off at the very least needs to be below yesterday's low. All right. I think somebody was asking where all bets off was. If the stock doesn't fall below yesterday's low, then there's no reason for us to get out of it. Now it does probably need to make a new high above 138, 3209 for us to get paid. So there's a difference. What's the stock doing to pay us? It's got to get above 13209. What's the stock got to do for us to bail? All right, it's got to, at the very least, it would have to fall below yesterday's low, make a new lower low pattern. Tom a lot of times uses a 72-hour rule. All right. What does that mean? 72 trade days or hours, 72 trade hours. So if we got in yesterday, which was Thursday, January 23rd, today is trade day 1 of being in the trade. Monday is trade day 2, and Tuesday is trade day 3. Now that works out pretty good because Monday, the high and low for Monday will kind of set a good frame for the week. So next week, check XBI on Monday, write down the high and low from Monday's trade day. And if the stock can get above Monday's high, then things should be looking pretty good. But if the stock falls below Tuesday's low, then Tom and I are going to have a conversation that says, do we really want to be in this trade? So whoever asked about that's your answer there on XBI. But it is down a little bit from our entry. Trade number 2 on SLV. I put a 30-minute chart for this one. I put that orange line at the bottom because that's our level that the stock has to trade above and stay above by next Wednesday, by Wednesday. Got into that one about 12 cents. It's down to 6 cents, and our target is 3 cents or lower. So as long as silver stays up here making new highs, you can let that one expire worthless Wednesday. But at the very least, it's got to stay above 83. And right now, if you look at the top of that metrics area, the ATR is about 4 points, and we're, more than 2 ATRs, I guess, right? Or almost 2 ATRs away from our short strike. So we're doing pretty good on that one. That one's just fine. There's GLD, daily chart, new high on GLD as well on gold. We did the Feb 20, 450, 453. Going to be a little bit harder to make money on a debit spread than it is a credit spread. But that one is up to $1.50, so about halfway to target. But our target is $1.74. It's a 450, 453 call spread, and the price of GLD is up to 458. So you might ask yourself, why is that thing not marked up to $1.74 target yet? Well, there's still 28 days left to expiration. And gold, you can see here, well, that's a daily ATR, but if I just open up a gold chart here on my roadmap, you won't see this, but the 14-day average true range on gold is over 7 points. So gold can move, right? Gold can move. And while we are at 458, which is 5 points clear of our top strike of 453, well, gold right now is moving 7 points in a day. So is it possible for a downdraft in the stock to wipe out our gains in the next 28 days? Absolutely is. So the way they price the options, it's all about odds of where, the stock can move. And right now, the stock in the next 28 days could move quite a bit in either direction. So when that's the case, they're not going to price up an option spread really aggressively until we get closer to expiration. All right. But having said that, if gold continues to make new highs, we will hit $1.74 in the coming days if it continues to make new highs. All right. So that trade's looking good. And we go back to silver. This is now a daily chart, another new high. This is again on the debit spread side, March 20th. So we got 56 days out to go on that one. That's got quite a bit. It is also almost fully in the money. It's up to $1.20. That's the same type of situation with the GLD debit spread trade. It's going to pay us as long as GLD stays firm. It'll pay us more quickly if it continues to make newer highs. All right. But that's really somebody asked yesterday, why would you trade credit spreads instead of debit spreads? Well, usually we use shorter time to expiration on credit spreads, and it has multiple avenues of paying you. If the stock is aggressively making new highs, it'll pay you real quick. If the stock just doesn't go lower, it'll pay you too. Whereas if you do a debit spread, if the stock stayed, um, in this case, because our strikes are basically fully in the money here, if SLV does stay where it's at, it'll eventually pay us, but we'll have to wait a long time, right? We'll have to wait a long time. So the credit spreads, they may not offer as much potential profit, but they do tend to pay you faster if, well, for many reasons. One, because you're using less time to expiration, but two, if your strikes are designed properly, at least, you're going to benefit from the natural tendency of options, which is to lose their value as time goes on. So you're fighting against time decay with the debit side. You're letting time decay work for you on the credit side. And that's why a lot of traders prefer to trade for premium. So all those trades look pretty good except for XBI, but XBI, again, this is back to XBI. If we had done a credit put spread where we sold a put spread below the low of yesterday, that thing, it might be down a little bit, but wouldn't be down that much, right? It wouldn't be down that much. But because we did a debit spread and the strikes are out of the money right now, that's why it's down a little bit. But we still got plenty of time. We just need to see a new high on XBI again, above 132.09. So you might set your alert at 132.09 on your platform just to keep you informed about what that stock is doing. Set an alert at the low of yesterday too. That looks to be about the 128.40 level. 132.11, 128.40. Doesn't have to be exact, but those are good levels there on XBI. Silver and gold, they look just fine. Any questions on that?
I think one point before you go too far, Jonathan,
Yep.
the reason you go out that far in time is to get reasonable prices. If you were looking at that, was it the GLD and the SLV with the far enough times out, and you're not seeing that much movement, well, if you got closer in time, you couldn't get that price that you were looking for. So it would be much more expensive to try and get into those trades.
Yeah, and Tom's looking to he's not looking to get a position on where you're just sweating bullets because has a downdraft of a point or two. And if you use too short expiration, you will experience that. All right.
Right.
So that XBI trade, even though it's down about 10% or so, if we use an expiration of next Friday, it'd probably be, down. I don't know. I have to go look at the actual details, but it'd be down more than 10%. Certainly, it might be down 30%, 40%. So when you're trading long options, it is generally best to use more time to expiration. All right. Now, Tom wanted me to mention new kid on the block, which is the Orion Trade Alerts. This is a new algo system that he has in Telegram. And most importantly, I think for members, is next Tuesday and Thursday at 1:15 Eastern Time. You're going to hear from Tom live. We usually do live trading with T-Buzz from 1:30 to about 2:30, 3 o'clock. So a little extra benefit of that is you can tune in at 1:15 to hear Tom talk about Orion and then stay for our live trading with T-Buzz folks. So it says 1:15 live for Tom for Orion, but you get kind of a double bonus for being in Orion and also being in live trading with T-Buzz. So live trading with T-Buzz folks, note that next week from Tuesday through Friday. We'll start at 1:15. The first 15 minutes or so will be about Orion, and then we'll dig into live trading with T-Buzz. Any questions on next Tuesday through Thursday? So 1:15 Eastern Time for Orion and for live trading with T-Buzz. Let us know if you have any questions because we're about to listen to what Orion is. You'll be able to learn more about what it is. But it's all about trading the QQQ, Rob, based on Tom's intraday setups. It's a pretty aggressive trade, I would say. It signals quite often. So if you like to trade, right, if you like to get trade signals, you will like Orion, I believe. It'll signal bullish, it'll signal bearish. And we tend to trade call and put spreads on it. So no questions on 115. All right, there's the link. If you want to join Orion, it's dtatrader.com/Orion, or give us a call. But again, I'm going to play a video so you be a lot more better explaining it than I can do here. But I'll post a link into the chat. Thanks for being here. A little unusual time at a doctor's appointment. Couldn't be here, but he'll be at live trading with T-Buzz at 1:30. So we appreciate all you showing up and staying tuned in. If we don't see you at 1:30, have a great weekend. We'll see you Sunday night, but let me cue up that video. You can learn about Orion.
You do not want to miss what I say about Orion. All right, let's do it. Scoring 20 to 25% gains from the stock market would grow your account pretty good, wouldn't it? Especially if you had 4 opportunities every week. It's where I pay less than $1 to get in with trades with the potential to deliver these type of gains fast as anything that we see. Not day trading now, but overnight trading. That ought to interest you by reworking the money over and over again throughout the week when it sets up. Now, past performance is not indicative of future results. We did this to give you an edge where you will be able to follow along and have the technical tools a lot of people out there have that you don't have because we had the programming power to do it. Now, in any trade approach, there will be losers. You got to be aware of that. You got to use level bet. Does everybody know what I mean when I say use level bets? Basically, what I'm saying is keep every trade equal dollars. That's the secret. Every trade equal dollars. Everybody give me a yes if you understand that. So if you buy 10 contracts at $1, that's $1,000. So every trade should be $1,000. That's what I'm saying. For those that are new, we got a lot of new people here. I'm Tom Busby. And what you're about to hear, you won't hear from anybody else because this is something that's reaching for the stars. I started markets way back in the 1970s. Since then, I've been featured everywhere. I paid my prices. I paid my dues. And if you ever listen to me, I think you get it figured out pretty quick that real trading is not easy. It takes discipline and it takes a process. 3 of my books, Winning a Day Trading Game in 11 different languages, The Markets Never Sleep, published years ago when I foresaw that one day we'll be trading stocks 24 hours. And of course, that attitude you got to have, trade to win. Now, I had a Globex terminal. That was the forerunner to what you're doing today, electronic trading. I was trading electronically when people didn't know you could do it through the exchange. I was one of the very few people that had this outside of Chicago. It was quite a machine. One of only 50 in the entire world at the time. I started a school called the Day Trading Institute back in 1996, later changed the name to Diversified Trading Institute. We're known as DTI all over the world. I built that school, that building, because I wanted traders to have a place to come and learn and educate themselves. With the technology improving now, I still do small classes here in Ponte Vedra, Florida, 5 to 8 people. This class happens to have 9, Adam, and one large meetup in the summer that happens at TPC where they have the players tournament. And that is Bill in the picture. But it never stopped for me from always trying to find an edge in the market. That's what traders do. And that's what we're going to be talking about tonight. An easy way to deliver to you Tuesday, Wednesday, Thursday, and Friday, these type trades. Using technology to do it. Taking my strategy. But I mean it sincerely. Now, I don't mean it's better or any more accurate. What I mean is all the work I do to deliver has been programmed as a strategy to come direct to you. Consistently, Tuesday through Friday. These 20, 25% gains, you made a lot of those trades with me over time. Now I've got it programmed. I think you're going to love it. Most traders will never think about this particular segment I'm in. They deliver the unique potential to take $1 for an option and turn it into a 20, 25% gain. Nothing odd or lucky about going there. I've proven it to you for years. You can do it. Now it's going to be programmed. It's going to be a strategy. We call it Orion. The phenomenon is real. It's buried in that market. A lot of people don't know about. I understand it. I've shared it with you in the past, and I think you're going to love it. What's so beautiful about this? You know the time to look, how the setup looks, and the trade to take. A lot of the hard part, and the option to buy. You just how to leverage it and use it, using level bets, and how options actually work, because most traders get it wrong. An option price is basically the market's answer to one question. What are the chances it ends up worth something? For example, if SPY is trading at 690, a 650 call expiring next month is going to be expensive. That's what it looks like, because the market says there's a high chance it'll end up valuable. That's the way options work. A 750 call, very cheap, are telling you it probably won't be worth anything by expiration date. That's simple enough to understand the two extremes. But here's where it gets interesting. Here's where experience comes to play. You look at these out of the money options and think lottery ticket, not lottery tickets when I traded. Imagine you could buy that cheap option and likely expire at 0, but every once in a blue moon they could hit it big. Or either lighting a few bucks on fire or a massive win. In fact, I've heard traders refer to these options as lottery tickets. That's not what makes these options special. What makes them incredibly unique is how sensitive their price is to small changes. Let me show you exactly what I mean. The football game that explains everything. Imagine Georgia is playing Marshall. You know who Marshall is, you know who Georgia is. Georgia is one of the best programs in the country. And that's not just me being biased. Marshall's not. The odds makers give Georgia a 98% chance to win. Now, if Georgia scores a touchdown on the opening drive, what happens to the odds? They tick from 98 to 99. It got higher. A 1% improvement. If you bet on Georgia, your position barely moved. But what if Marshall scores that opening touchdown instead? Nobody said that. Now somebody thinks Marshall's going to win, but the odds shift from 2% to 4%. That's 100% movement. You see the percentage in using the numbers this way, it really explains it well. 100% increase in value from the exact same action on the same field. Marshall odds are far more sensitive to what happens along the way. Option market works exact same way. Take a look at the SPY from Friday. Safe income trade sitting comfortably below current price is already valued at 80 cents on the dollar. Even in the best case scenario, you're looking at about a 20% upside. But to trade our system is priced at 33 cents on the dollar with over a 200% of theoretical room to move. Now here's the key. Same price move that pushes the safe trade from 80 to 82 can push our trade from 33 cents to 50. Same movement. Now think about what that means. $1,000 in the safe trade, you're up 25 bucks. In our trade, you're up 515 on the same movement. The key is knowing when to place the trade and how to place it. That's a 20x difference in return on the same underlying asset in the same time frame on the same move. Because the pricing sensitivity of those options, and that's what we've cracked. We're not holding these positions hoping for a home run. We know they'll probably expire worthless at the end of the expiration, but we don't care about that, do we? We're not marrying these options. We're dating these options. We care about their potential to gain outside value along the way. We only care about capturing that 25% income. Stock doesn't need to do anything dramatic, just needs to move enough to shift the unlikely to the slightly less unlikely. That small shift in story is where the quick gains live. Over the past few months, we've been building a system to capture these exact opportunities, to capture that 20 to 25% sweet spot in the shortest amount of time possible. And here's the beautiful thing about it. Everybody that I show this to says, Orion, I love the name. Give me a yes if you love the name of Orion. You're going to love it better when it starts paying you Tuesday through Friday. When it pays. Here's how it works. Every day it scans the markets using DTI method for breakout opportunities in either direction. Automatically alerts us throughout the day, let us know if the trade is imminent. When an official breakout is triggered, the algorithm scans the entire option market, searching for the secondary options that are most sensitive to price change we can take advantage of. When we find the exact option, we generate that option setup, and we get our returns within 72 hours. Anybody ever heard me use the word 72 hours? We build it in. It fires those details and automatic updates straight to the private Orion Telegram channel. It gives you the ticker, exact options, price, target, exit instructions. One of the favorite things about the way our Orion works, if the trade hadn't hit our target within 72 hours, we move on and look at the next one. We keep it simple. Simple is good. Take a look at December 26th. Well, most of us still recover from Christmas. Orion was scanning the market for these opportunities. It printed this out. It told us the exact options to buy. It told us where to set our sell at. And it told us about the time stock within 72 hours close the position. Not hard to follow, is it, with those contingencies? That was a short opportunity on the QQQ. It is neutral to which way the market goes. It sets up where the best opportunities there and odds favor, up or down. Notice the trade structure we're looking for QQQ go below 618 by January 16th. Now look at the current chart in QQQ. It's not looking so good for QQQ below 618 that week. But remember, we don't actually care about that one because we're already out of it at our profit. So when the QQQ dropped, it smashed our target the next day, we're gone. In truth, I never believed the market would blow 618 in January when we did the trade. But as you know, I was very bullish on January 2026. But that's not the point. The market said go short. We took it. What made this trade work so powerful is how we grabbed an easy 25% gain, even though the market was weeks away from knowing the result of the final trade. Does everyone see the difference here, what we're doing? We're letting the market determine, regardless of what we think, the most appropriate direction to take, the time to take it, the profit that we're going to take, and where we're wrong when we get out 72 hours later. This is the key to Orion right here. This is not a lottery trade. It's a high odds trade setting up that we're going to take advantage of it. Take advantage of these small changes in the odds along the way to produce these outside gains. The Orion algo combines the two powerful forces, what might be the best trade I ever come up with. You use the DTI method to find it, the exact moment to get in, the exact option to take, the exact direction to take, and now it's in play. And of course, when the price is moving, it will change the value of the options. Second, it identifies the exact options most sensitive to that price shift, so that when the price does move, we get the biggest payout possible. Here's a signal on January 6th. Look at the signal. Signal was long, January 6th. Now remember this trade, you should remember this one, we made it. As you see, Orion found options looking for the QQQ to hit 639 by January the 30th. Notice the price of the QQQ never got near that 639, nowhere near January 30th, not even January 30th right now. It's remarkable how consistent this is. Generated a 25% return in a few hours thanks to our special option Orion identified to create an outside gain. You see in what I think might be the best trade setup that we've come up with in all these years, because I'm not having to do the work because the work's already inside the algo. I love it. And Orion on December 19th, Medallion members have had access and they're screaming about how good it was. Mary Ann was with me Thursday and Friday one-on-one. She said, hey, we got an Orion signal. I'm over there trading, and I said, good. My goal is to trade this through Q1, prove its most dynamic income opportunity in the entire market for 2026. We'll open it up to the public after that, April or May. But today, we're opening up 30 pre-release spots for anyone who wants to test alongside Jonathan and me. When we open this up to the public, I will plan to price it at $19.95 per year. It's going to be a steal for folks who understand the power of Orion. But if you're one of the first 30 in the door, takes it, you'll be an Orion founding member. It gives you special benefits, like the masterclass I'm going to do Friday, which means you can pay $19.95 to access to Orion algo and real-time alerts and never pay again. The lifetime access to Orion is just $19.95 if you want to go on and lock it down. If you decide to charge more than $19.95 per year, you'll be locked in at that price. Let's drop the link. Drop the link, dtitrader.com/Orion. Call our team at 904-706-3532. On top of that, you will get lifetime VIP membership for $19.95. Sign up for Orion Trade Alerts right now. Take one of the spots. You won't pay more. You're locked in. We had our first guy through the door. Glenn, thank you so much. 29 left. Now I have a masterclass set up for Friday because we're going to really milk this sucker. So be part of it. We'll walk you through the trade step by step, teach you how to make Orion one of the #1 trading tools. Let me answer some questions I'm sure you have about Orion. How does Orion find these specific opportunities? First, Orion dynamically updates the reference levels we have had each day and monitors price action for a breakout or breakdown. Then uses state-of-the-art options data feed, one that costs about $100,000 per year, to dig through the options chain and find a specific trade that's most sensitive to the upside potential to the breakout. That's what you don't have, you will have in Orion. It recognizes the trade in detailed alerts, sends it in real time to our private Orion Telegram channel. Does Orion trade both directions? Give me a yes. It does. It's based on our method. When the market goes up, goes down during that time frame, it trades. Finds the exact option to trade and take advantage. When do I lose? Do I lose 100%? Always, there's that rare possibility, but odds are, since we're getting out in 72 hours, no. That's the big benefits of Orion. The clock ticks from the time you enter the trade 72 hours later. Exit trade with a small gain or small loss if it doesn't hit the target. Even better, because these secondary options are already priced in low probability, probably don't lose value as quickly as something closer in. How do I know when to get out? Every Orion trade gives you the exact target to set on the trade. You know exactly where to take your profit. The lifetime membership, $19.95, only 30 of it. Take it. You won't pay $4,000, you won't pay $5,000. You'll be locked in at this price, VIP. Believe, because it does work, and you will see it work in real time, along with me and Jonathan would do it. 29 left. Glenn was first. Just tell me if you're coming in where I can count it down. We'll pull down the slide. Thank you very much. Any questions, ask them. It's going to be a tremendous week. I hope you're part of it. Cindy's in, 28 left. James is in, 27 left. Tuesday through Friday, that'd be 4 trades maximum a week, William. You'll have to take it all, but you can't. Now, don't join Dave if that's the issue. 26. Got to take a chance sometimes. You know how good this stuff is. You're going to love it at this price. All right, we're down to 24. Since I'm not going to miss a founding special yet, hadn't done it in all these years. Way to go, Glenn. Steve, I can tell you it's going to be somewhere around 4 out of 5, okay? 4 out of 5. Every trade. The difference is 23, Alan's in. If you want to talk to Kelly or Jeffrey, put your name, phone number in there. Adam will reserve one of the spots for you. Alan was smart by doing it. He got him a spot doing it. Around 12 o'clock, iPads in. I think we're down to about 19 left. No, William, there's not.
Hey, T-Buzz, real quick. The window for the alerts are from 12 p.m. to 3 p.m. Eastern time, Tuesday through Friday.
Yeah, right. Tuesday through Friday, 12 to 3. I said after 12. I didn't give them the ending thing. Thanks for clarifying that. Orion. We're reaching for the stars here. All right, Dave, put your email in there. They'll reserve a spot for you. You have to put your email and phone number. If you do it, you're going to talk to Kelly or Jeffrey. Sylvan. All right, we're down to 16 spots right now. Thank you. No problem, Bob. Put your name and email and we'll reserve a spot for you. Got to have your name and email, though. We're not messing around with this. It's too valuable. Don't you love that name? Orion. This might be the best name we've come up with in years, Adam. Orion. Just rolls off your tongue. Any other questions? That's right, Skip. That's where it came from. Know your stars. Debits. They're debits. You can, William, but we got it. You got to remember, we got people a lot of different levels of experience. Would you say? I got people starting out 2 or 3 years. I got people out to 20 years. Everybody can alter it to fit their desires. We take the money and run because that's what we do, because we know it's going to generate another one. But some of these trades might be 60 or 70. You don't know. I want you to think about something. Just go back to history. Told you last year crude oil was going to drop 20%. I told you last year that gold was going to make new highs. It made a new high. I told you in December silver was a straight out buy. Don't look back. All these things are based not on what I think, but what the numbers tell me. This is what Orion's about. Taking the numbers, taking what you think out of the way and focus on what the market tells you to do. That's what I love about it. No running and hiding, baby. When that thing prints a trade, you got to take it. Right. That's right. What I'm excited about is the following. You get in that Orion channel and you're going to start working. It's going to make you say, wow, my account's growing. That's why I got involved in trading, right? Anyway, we're just trying to use the technology. We're doing a good job of it. I believe in technology. I believe in process. And I believe in doing our work. We've done it. Mary Alice, as long as you'll hold any of these options, it's 72 hours. All right, well, I'm going to wrap it up, Adam. You want to replay it for everybody?
Yep, I can do that. Just give me about 4 minutes to stop this and get everything ready to replay if you want to.